To Offices Adda 24/7. My name is Niharika Valia Bhatnagar, and I am with you with the area of accounting and financial management for bankers. Okay, so today what are we going to talk about? Today we'll be taking up the basics of accounting and I will be revising them further. And if you're looking forward to the courses, I hope you have taken the paid courses. And if you haven't, then from tomorrow onwards, we are starting with a new course. So I believe that would be helpful for all those people who are just about to start. So kindly go ahead and check out our batches and let's begin with our class today. It's going to be a rapid fire thing, so let's keep on doing all the questions within the limited time and in the best possible way. Okay, so when we talk about the first question says the fundamental accounting assumption is. Fundamental accounting assumption is materiality, business entity, going concern, or dual aspect. When we talk about the fundamental accounting assumptions, those would include materiality and business entity and dual aspect. These are principles of accounting, while the going concern is basically an accounting assumption. How do we define it? When we talk about materiality, materiality means something really important, which is relevant. Under the term business entity, we have two separate organizations. That is, if A is the owner of the company and the name of his organization is A and Company, this is basically sole proprietorship that he's having. So basically, this person and his organization, they are not same. They are different. When we talk about dual aspect concept says that it uses the basic balance sheet equation. That is, assets is equal to capital plus liabilities. Okay? So in this case, the correct answer would be going concern. Okay, now let's move on. Basically, the term going concern, in case you don't know about that, so going concern is basically something which talks about an organization is assumed to continue for a longer period. That is going concern for you. This means that if I start my business today, I'm going to assume that this organization is going to live for a long period of time. That is going concern. On the basis of this, I will get assets for the business and I can charge depreciation, that is usage, wear and tear of those particular machineries and all over the period of time. Next point. Which of the following are of capital nature? Purchase of goods, cost of repair, wages paid for installation of machinery, or rent of the factory. When we talk about which of the following is of capital nature, capital means that is in which we are buying any asset or selling any asset. So purchase of goods is a day-to-day basis thing. Repair is something that will not increase the capacity. It will not increase the capacity of that business, isn't it? And when we talk about the wages paid for installation of machinery and rent for factory, again, rent for factory can be defined as something which is related to the area of rent is an expense that we have to bear. So the only thing that is different here is wages for installation of machinery. Because if I want this machinery, everyone, I will have to pay for the installation. Without that installation price, nothing will work out. So it's way better that I pay the installation first and make it ready to use. Till the time our machinery or asset is not ready to use, it is not considered as an asset there. It will take a little time. It is asset under construction at that point of time. So once the construction is over, this is how it becomes, right? So wages paid for the installation of machinery are of capital nature. Which of the following errors are not revealed by the trial balance? Compensating errors, errors of commission, wrong balancing, or wrong totaling. In this case, what do they say? Which of the following errors are not revealed by the trial balance? Trial balance is basically a statement in which all the accounts are balanced further. Number one, compensating error is what? Compensating means we made two kinds of errors. Now, compensating errors can be defined as something that compensating is basically I have a debit side and I have a credit side. So I've got two areas. So in this case, what's happening is compensating errors are those errors which there is an error of 100 rupees on the debit side. There is an error of 100 rupees on the credit side. So will the trial balance still match? Errors of commission is based upon if there is a particular person named Ram. He had double A in his name. Maybe I would have written his name as RAM. And at the same time, maybe I was supposed to put 2 zeros, I have put 3 zeros. Those kind of mistakes are there in errors of commission. Then comes wrong balancing. Under wrong balancing, the ultimate figure that goes to the balance sheet is basically changing there. So in this case, what's happening is that this ledger is going wrong. So what will happen is my debit or my credit, any of those would go over and someone would go under. Then wrong totaling of an account. In this case, what will happen is one particular thing, see the totaling goes wrong, then the ledger goes wrong. Again, the same scenario in this case, if one particular item, say item related to cash, wrong balancing of cash is there, my trial balance will not match. And in the wrong totaling of an account, if the total is wrong, then ultimately the balance will come out to be wrong. Again, what will happen is one particular area, as I was telling you, one thing will go undercast. It would be less than the required, and one thing will go overcast. That's how we define this area, right? That is called compensating errors. Next, if average inventory is of rupees 12,000, closing inventory is rupees 3,000 more than the opening inventory, then the value of the closing inventory will be 12,000, 24,000, then it is rupees 10,500 and rupees 13,500. In this case, what do they say? In this case, they are saying that if the average inventory, okay, average inventory is what, everyone? What's the formula for average inventory? It is opening plus closing divided by 2. So what are we doing? Average is 12,000. Closing inventory is 3,000 more than the opening. Let opening be say Y. So the closing will be Y plus 3,000 and it would be divided by 2. Right? This would be the formula, as they said that closing is 3,000 more than the opening. So in this case, what I can do is, this is 24,000 is equal to 2y plus 3,000. You can solve it further. It will turn out to be 21,000 is equal to 2y. So what's the answer in this case? The correct answer will come out to be 10,500. Y is equal to rupees 10,500. So this particular question is less based upon the I think I would say the accounting area, more it is based upon the mathematics area. So that's the point regarding this particular section. Right? Okay. The answer is 10,500. It is 12,000. No, it turns out to be 10,500 only. The answer is C. The answer is C because the average inventory is 12 now. So in this case, the answer is C. Okay, here comes the next question now. Sunset Tours has rupees 3,500 account receivable from Mohan. They are supposed to receive 3,500 from Mohan. On January 20th, the latter makes the partial payment of 2,100. Out of 3,500, the person has paid 2,100, right? So they are saying the journal entry on January 20th by Sunset Tours to record this transaction would include a credit to the cash received account rupees 2,100, credit to the cash received account receivables 2,100, debit to the cash 1,400, debit to the accounts receivable 1,400. Okay. Now in this case, one thing is for sure, out of 3,500, 2,100 is paid. That means the remaining amount of 1,400 is still pending. One thing is sorted there. Now the point is, Sunset Tours has 3,500 account receivables from Mohan. I am supposed to receive money from Mohan. Okay, one thing clear. Accounts receivable from Mohan. This means he is my debtor. This means he is on the debit side. So a credit to the cash received account of rupees 2,100. Credit to the account receivable account 2,100. Debit to the cash of 1,400. So technically we are receiving cash to accounts receivable. It is 1,400 and 1,400. So in this case, the correct answer that would come out is we have received cash, debit of 1,400 and credit of accounts receivable by 1,400. This is a journal entry. In this case, what I have done is I have applied the rule. This is an asset, a real account. A real account says debit what comes in. Account receivable is what? Account receivable is basically a person from whom I'm going to receive money. So he's giving me money now. So credit the giver. No, this is also wrong. The correct answer is the payment is of account receivable later makes. Acha, partial payment of 2,100 was there, na? Haan. So in this case, it has to be this only. I just chose the wrong point. The correct answer is given there only. The correct answer is a credit of account receivable and debit of cash. This was the remaining amount. 14 was something that was left. We received a payment of 2,100 only. So in this case, let me just write it again. Whenever I receive money, received money from Mohan. Since I've received money from Mohan, basically it is cash is coming in to Mohan. I just wrote the wrong point. It was basically 2,100 is something that I've received. 1,400 was the balance. In case you are making a ledger, then it would go to that. Okay? So that is the wrong point there. Then cash account debited to Mohan. This would be related to the area of 2,100 and 2,100. Because I've received 2,100 in my pocket. So in this case, either they excuse me, they should have given the cash as something which is related to the area of I have received cash, and they would have given that it is related to Mohan. In this case, the options can be given as a debit of cash, or it can give a credit of the accounts receivable. This would be the correct entry. Achha. Next point, everyone. Okay, I hope it's visible now. In this case, what are they asking? If the rights and beneficial interest in the property are transferred, but documentation and legal formalities are still pending, then seller and purchaser should record their books of accounts and as sale and purchase. This is an example of. The point is, the beneficial interest and the rights are already given. That means the sale is certain or uncertain. If this would have done, the sale would have been certain in any case, isn't it? So in this case, if the rights and beneficial interests in the property are transferred, but documentation and legal formalities are pending, then seller and purchaser should record their accounts as sale and purchase. In this case, the correct answer would be substance over form. Substance over form means you actually see the reality rather than just looking at the documentation. Sometimes the documentation and the realities can be a little different. The documentation was left, but everything else was already done. So in this case, it is substance over form. Now, next point, everyone. It says which account is the odd one. So you have to find out the odd man out. Let's look at it. Which one is the odd one out? Office furniture and equipment, freehold land and building, inventory of raw material, plant and machinery. Which one account is an odd one out? So the odd one out was office furniture and equipment and asset, land and building asset. Inventory of raw material is what? Inventory of raw material can be stated as something in which I would say that inventory of raw material would be what? Inventory is basically something which we are purchasing, making and selling. So technically this is an expense that I am incurring to earn revenue. So this is the exceptional part, while all these three are 1, 2 and 3. These are assets. That is inventory of raw material. Next point, this is Ind AS 7 is related to what among the following? Valuation of inventories, cash flow statement, revenue recognition or leases. Ind AS 7 is related to cash flow statement. AS 3 and Ind AS 7. It is B, cash flow statement. The statement which records inflow and outflow. Then comes present liability of uncertain amount, which can be measured reliably by using a substantial degree of estimation, is termed as. You can see that it is possible that we can find out the value. There is a certainty, and at least up to a great extent, I can still find out what the particular amount would be. So is it provision? Is it a liability or contingent liability or none? See, contingent liability is related to uncertainty. So this point is sorted that this is uncertain. Then liability is something that is a burden on my head, and that is already done. There's no need to estimate it. We know the amount already. Provision is something which is based upon a great degree of estimation. Right? So in this case, the correct answer is A. That is provision. If a concern proposes to discontinue its business from March 2010 and decides to dispose of all its assets within a period of 4 months, the balance sheet as on 31st of March 2010 should indicate the assets at their historical value, realizable value, costless depreciation or cost price or market price, whichever is lower. See, when you are discontinuing your business now, that means you are putting an end to the business. The moment you decide that you are putting an end to the business, then it's no fun to record the books of accounts in such a way that you are recording it at the cost, because we bought at that particular amount. You need to know what is its market value today. What will you get in the market today? Because historical cost is the cost at which you purchased. Costless depreciation is current condition. Based upon the current condition, maybe I would have bought it for rupees 10,000, but the point is that the technology has changed, the depreciation has to be put on it. So after depreciation of 8,000 rupees, the current value is 2,000 in the books. But at the same time, if I try to sell it in the market, this thing has somehow turned valuable because it has turned antique. So they said that they can give me say 12,000 for it, more than the value, just because it is turned antique, a very unique thing which is not available in the market anymore. So in this case, what will you record it at? Since the organization is being put to an end, so then that means you will record everything at the cost value, or sorry, the market value, I can say, which they call it net realizable value, while historical cost is the past and costless depreciation is called the book value. So we are going to note things at the market value. So the answer is net realizable value. Next point, Mr. A purchased a machinery costing rupees 1 lakh on 1st of October. Transportation and installation charges were incurred, amounting to rupees 10,000 and 4,000 respectively. The dismantling charges of the old machine in place of which the new machine was purchased amounted to rupees 10,000. Market value of the machine was estimated at 1,20,000. While finalizing the annual accounts, A values the machinery at 1,20,000. See, the point is we are noting the thing at market value. Is it right? Are they saying the organization is dying? I told you if the organization is dying, then it's worth it to record it at the market value. But if it is not dying, then Mr. A has purchased the machinery worth rupees 1 lakh. Okay, he purchased it for 1 lakh. He incurred 10,000 on it. Then he incurred 4,000 on it. And then they dismantled the old machine, and then in which a new machine was purchased amounted to rupees 10,000. So you can actually take this one as deferred only because the dismantling of old was done and then the new was done. So I think, but no, if this was essential, always remember if the costing is essential to get the new one, then you will have to add it in the cost of the new one only. Because if you don't remove the old one, you cannot put the new one. So that can be taken there as well. In this case, what we are doing is, why are we recording things at market value while we would have spent different amount of money? Even if I consider this, if the dismantling charges of the old machine in place of the new was purchased amounted to rupees 10,000. Now the point is, if I include all these things, the cost is different and the market value turns out to be different. I will always record things at cost because the amount at which I have purchased it is relevant, not anything else. So in this case, the correct answer would be the cost concept. Matching is related to the expenses and incomes relating to this year should be recorded. Realization concept shall be the concept which talks about realization can be said as something which is related to which is related to the area of recognizing the revenue. As soon as you get it, only then you record it. Periodicity concept says, can you read the entire chapter in one go, which is of maybe 80, 90, 100 pages? Maybe at one point of time you could, but now can you? Or if I give you a book of 300 or 500 pages right away, that finish it off right away, can you do that? No. I think for a human now, at this point of time, or even for a regular basis, if that particular book has not even a single space in it, it is all paragraph form and written in such a way that it just goes on and on and on, page by page. So what will the person do? Maybe read the first page, second page, and he'll be like, "Nahin, I cannot read it further." If the thing is in so much of amount and not divided into different sections, it will really hit you hard now. So periodicity concept talks about dividing the things into different periods. So in this case, the correct answer would be the cost concept. So periodicity concept is basically the concept which is based upon year by year division of the particular business to analyze it. Next point. Mohan purchased goods for rupees 15 lakh and sold 4/5 of the goods amounting to rupees 18 lakh. He paid amounting to rupees 270 during the year. He has paid expenses. He paid the electricity bills. He paid advance salaries to the people and and was paid for the month of January. Achha, salaries is also paid in advance. He counted the net profit as 3,50,000. The net profit calculated by him is correct according to which concept? Okay, if we talk about the various rules of accounting, in terms of accounting, there is a very important rule which is called matching concept. See, the point is, if I spent money this year to earn the income of this year, only then the entire thing becomes relevant. In this case, we will not record. We will not record the advance. We will not record, say he paid 5,000 of an electricity bill of 2008. So probably this is also of previous year. These two things shall not be recorded. What we'll record is only and only this portion. The above three should be recorded: advances and the things which is of previous year, outstandings. They are never recorded because they don't belong to this year. So the correct answer, whenever you are looking forward to the correction there, na, they are just using the matching concept. Revenues and expenses only for this year should be considered. Entity concept is based upon the area of knowing the business and the businessman as a two different entity. Periodicity talks about different years. Conservatism says be scared whether you will receive the money or not. That is why you make an anticipation, you make a provision for that. That is called conservatism. In this case, the correct answer is the matching concept. Next question. Rupees 200 that is paid as wages for erecting the machinery should be debited to repair, machine, capital or furniture. If a certain amount is paid for repair of the machine there, then where would we put it? Repair, machine, capital or furniture. If we paid rupees 200 for the wages, then this is related to the machine. Because without paying these wages, we wouldn't have got this machine now. So if without paying the wages, we do not get the machine, so we will not record it. So in this case, the correct answer is machine account. Rupees 2500 were spent on the overhaul of the machine purchased second hand. If I have purchased a machine second hand even, the rule simply says that if you pay even for a second hand machinery, till the time you wouldn't have done the overhauling, can you get it done for yourself, everyone? If we do not get the serviced as per our requirement, we cannot use it. So in this case, the correct answer would be it would be a capital expenditure. Without incurring this expenditure, this particular machine could not have been used. So in this case, the correct answer is the capital expenditure. Next point, the financial statements only consider assets expressed in terms of money terms, then liabilities expressed in money terms, assets expressed in non-monetary terms, and assets and liabilities expressed in monetary terms. When we talk about financial statements, it's all about finance. Anything has to be stated only and exclusively in monetary terms. So in this case, the correct answer would be assets and liabilities which are in the terms of money. Next point, which statement represents the accounting equation? Assets is equal to liabilities plus owner's equity. It is income statement, statement of the cash flows, or the balance sheet, or none of the above. I just talked about this particular concept that assets are built based upon liabilities plus capital. So how do we calculate this? Assets equal to liabilities plus capital. That this particular term can be stated as something which is called accounting equation. It is also called dual aspect concept. It is also called basic accounting equation, and it is also called as balance sheet equation. There are different names to this particular concept. It is balance sheet. Next point, the bad debts written off. The bad debts written off as bad if recovered subsequently are credited to the bad debts recovered account, credited to the trade receivables account, debited to the profit and loss account, or none of the above. The correct answer to this question would be they would be credited to the bad debts recovered. Bad debts means those debts which we cannot recover at all. This is a dead loss. The day you receive back the money, that means you were not expecting to get back the income. But when you get the income, it is cash to bad debts recovered. This is the journal entry. So you will be debiting the cash and you will be creating the bad debts account. Next point. Withdrawal of cash from the business by the proprietor should be credited to. If the particular person withdraws money from business, that is called drawings, and he is withdrawing cash. So the second element is cash. So the journal entry would be drawings account debited to cash. So in this case it is drawings capital, cash none. It is cash. Withdrawal credited, na credited part is cash. Oh, I'm sorry. The question is related to the area of should be credited to. Should be credited to simply means that the portion which would be on the debit side, that is drawings only. Withdrawal of cash should be credited to. The point is drawings only. You should be the debit portion is drawings. This is a portion of journal entries which is quite confusing. The element they are asking. So in this case, it should be credited to now. That means it should be the term which should be on the debit side. It is drawings only. Next point. A businessman purchased goods for rupees 25 lakh and sold 80% of such goods during the accounting year. Ended rupees 35. Okay. Now the particular person has purchased 25 lakh worth rupees things. And then he sold 80% of it during the year. Right? So the market value of the remaining goods was 4 lakh. But he valued the closing inventory at cost. Okay. First of all, let's note down 25 lakh is the value and 80% of it is 20 lakh. So in this case, he has sold goods worth rupees 20 lakh. So that means the current value is 5 lakh rupees which is left, and the market value of it has declined and it has become 4 lakh. Now that you know whatever you have, its value has declined in the market already. It was earlier of 5 lakh, now it is of 4 lakh rupees. That means there is a dead loss of 1 lakh rupees, but he noted it at 5 lakh only. Is this right? It isn't, because the goods has to be noted at its in this case it should be noted at its I would say the cost. There's a rule which says cost or net realizable value, whichever is less. This is also given in AS2, and this is also covered under the concept of conservatism. When you can see a loss coming up, always record the loss separately. You should be knowing that where to keep that money separate. So in this case, the correct is conservatism. Anticipate the losses but not profits. Cost or NRV, whichever is less, is noted. Whatever value is low, that value is to be noted in the market. It is conservatism. And among the following, which is true about AS7? No exemption has been provided to Ind AS 7 with regard to applicability of AS3. Bank borrowings are financing activities. Cash flows of foreign subsidy shall be translated at exchange rates between functional currency and foreign currency, and all of the above. If I talk about Ind AS 7, it is either it has to be written as AS3 or Ind AS 7. As I told you, this is the area related to the cash flow statement. In terms of cash flow statement, yes, AS3 and Ind AS 7 is same. AS are given in terms of the accounting standards which are given by ICAI, and Ind AS are given by Ministry of Corporate Affairs, because we wanted to collaborate with the international levels. They were using their specific standards, and we had to actually meet up with the international levels. That is why Ind AS were introduced. In under India's first part is correct, even the second is correct, and even the third is correct. If you are looking forward towards foreign currency, it has to be noted that way. Cash flow of the foreign currency shall be translated at the exchange rates between function and foreign currency. This portion means that, see, the point is, if I would like to buy something in dollars, ultimately I'll have to report in Indian currency, that is rupee. So in this case, the cash flow of any foreign subsidiary, we have to translate it into our functional currency. Otherwise, we will not be able to note down the financial aspect. Okay? Because $300 is definitely not equal to 300 rupees. So in this case, the correct answer is all of the above. Next point. Providing depreciation on fixed asset is in accordance with the following principles: going concern, matching, or materiality, or all of the three. Going concern says that the organization is going to continue for a long period of time, right? Then when we talk about the next point, that is when we are trying to provide for depreciation, then in this case what will happen is going concern, matching concept is this year's expenses and this year incomes are to be noted. Materiality means everything which is relevant or materialistic, that should be noted. It would be 1 and 2. Matching concept and going concern concept are correct, because if I note down depreciation, I believe my business will live for a long period, so I can take the expense in different years, and every year the expense and the income that I earn from that machine will also be noted regularly. So in this case there would be uniformity. So in this case the correct answer is 1 and 2. Okay, now let's move on to the next question. According to the accrual concept, transactions and events are recorded in the books of accounts at the time of their settlement in cash. Transactions and books are recorded at the time of they are entered into. Transactions and events are maybe recorded either at the time of settlement or when they are entered into. Transactions and events may be recorded at any point of the relevant year. The correct answer is the transactions and events are recorded in the books at the time when they are entered into. The day you enter, then that is the day we record it. This is called accrual basis, and also called the due basis. Okay? Next question. Amortization of intangible assets such as goodwill, which is indefinite life, is an example of the accounting concept: conservatism, continuity, realization, or measurement. Amortization of intangible means the value of intangibles declines over the period of time. Is it based upon conservatism? Is it based upon continuity, realization, or measurement? I believe my asset is going to stay in the business for a longer period. But the point is, I will have to make sure that if the value is declining, I record it right away. Right? In this case, if the value is declining, it is required that I record it right away. Because later on, if the asset is valued at a higher level, it would be wrong. The correct answer would be conservatism. Conservatism says that in general concept of recognizing expenses, liabilities as soon as possible, then there is uncertainty about the outcome. But to only recognize revenue assets when they are assured of being received. When the chances are there that we will receive it, then only we record it. If there is a loss coming up, we will anticipate and record accordingly. Then comes which qualitative characteristic of accounting information is reflected when accounting information is clearly presented. Reliability, relevance, comparability, or understandability. When we talk about the qualitative characteristic is reliability, relevance, comparability, or understandability. Qualitative characteristic simply means that we are looking forward towards the area of there are things that which are quantitative, agreed, but in accountancy we have the area of qualitative aspect as well. Reliability means it should be whatever you are saying is absolutely correct. Relevance is related to the topic itself. Comparability is you can compare it with something else, and understandability means you can understand it properly, right? So in this case, since we are looking forward towards reflecting it properly, the correct answer is understandability. Last question. Dash are those fixed assets that have fixed content, like coal in a coal mine. The value of the asset goes down as the contents are taken out. That is the area of that is intangible assets, fictitious, wasting, or floating. Intangible means which cannot be touched. For example, goodwill. Fictitious means that is just existing in the books, but it doesn't exist in reality. There has been cases. For example, preliminary expenses. The expenses that are incurred before the company was made. Those expenses are already done, but I'll record it right now. That is noted as preliminary expense. Then is wasting asset. Wasting assets would mean the assets which, as soon as we take something out of it, its value declines. Floating is that is the asset which whose value keeps on changing. That is floating. In this case, the correct answer would be wasting would be coal. If I take out the coal out of coal mine, the value is reducing. It is called wasting asset. Right? So that's it for the day, everyone. I hope the lecture was useful for you. So kindly go ahead and check it out. If in case you like this particular session, then please keep on the click on the area of like, and then at the same time don't forget to subscribe our channel. Plus at this point of time, there's one more important thing that I wanted to discuss. If you haven't taken up our Sankalp batch now, so the Sankalp batch is also there. So if you haven't seen any of our paid batches, you can start it from tomorrow itself. As from tomorrow, a new batch is starting. That means this is the perfect time where you can look forward to our classes. Let me just show you. You have to go on to our website, that is www.adda247.com. As soon as you go on to the website, you will find the JIB and CIB area. In the area of JIB and CIB, you can click on the area of JIB October 2023. Here you will find the Sankalp batch, right? So the Sankalp 2.0 is here, but the JIB's Mahapack is also there. All you need to do is you have to use the code July75, right? Or you can use the code FLASH77. At this point of time, FLASH77 would be better for you, as under this 78% discount is available, and it would cost you 6699. For 1 year the JIB is available for you, and that too at less than, I would say it is less than 1000 rupees per month, है ना? So this would be for 6699. This includes everything: video courses, test series, then revision patches that we come up with, the ebooks, then marathons, mini marathons, practice paper, doubt classes. Everything is there in the Mahapack 2.0. Earlier these things weren't there, which included practice paper, mega marathon, and mini marathon. These had been included in this year itself, so we are adding more and more, right? And at the same time, English medium as well as bilingual batch, everything would be open for you. If you take the Mahapack, everything that is given in the JIB area, JIB vertical, everything is open for you, from pin to an elephant. You can see everything in that portal, right? And if you plan to look forward towards JIB and then give back to back giving for CIB as well, right? So then what you can do is you have to go to the area of JIB and CIB ka Mahapack, and then you can take up the JIB CIB Mahapack 2.0 as well. Again, double validity, it is available for 2 years. So that is something which is beneficial for you. Test series are there, live classes are there, then video courses are there, even the practice papers or the doubt sessions are there. So everything has been added. All you can do is click on the area of buy now, use the code flash77, and you will get it for 11,500. Okay, so the cost would be 11,500. Okay, I hope it is visible now. It would cost you 11,500. So kindly hurry up and check it out on our website or in our app for further details.